The U.S. economy is clearly slowing.
Rates have been going down and down and down.
Debt ceiling crisis.
And debt has been going up and up and up.
Lifting the debt ceiling.
The risk of recession.
A global recession.
From the COVID times, the concerns about a looming recession are growing. Any recession of history needed a trigger point, and now a historical player is making a comeback as a potential trigger, that is, the US debt crisis, which had reached more than $33 trillion, which is highest in the last 100 years. Let's understand, why does a powerhouse like US borrow so much money? What is the impact of it on US and rest of the world? And most importantly, how this could reshape our lives amidst the looming threat of recession. Stick around, it is simpler than it sounds. What is debt? At its core, debt is borrowing. And when it comes to governments, they do it by selling something called bonds. Picture a bond as a fancy note saying I owe you to public in the name of government. The government issues these pieces of paper saying, hey, lend us some cash and we'll pay you back. People invest in these bonds and they get interest payments in return. Everything is good till now, but the issue is with the US Treasury. A body which issues these bonds now accumulated a lot of debt, of which 78% belongs to public, and there is a fear that it will default. How can United States issue a significant volume of bonds despite the existence of debt ceiling? To understand what is happening with debt, you need to know the concepts of debt to GDP ratio and debt ceiling. Let's take an example to understand this. Suppose Raju, a businessman who makes revenue of 10 lakhs every year, took a loan of 5 lakhs. Then his debt to GDP percentage will be 50%. That is, his total debt divided by his yearly revenue. If it is a country, then it is total debt of a country to its yearly GDP ratio. In simple words, it is the country's ability to pay back its debt. Governments work similarly like businesses, and they cannot borrow unlimited money. To add legality to this limit, they introduced upper limit of borrowing and called it as debt ceiling. This indicates that government cannot borrow beyond this limit. But historically, every time when US touched the debt ceiling, we see it increasing the limit to higher level. As a result, the current debt to GDP ratio is standing at 124%, which is 14th highest globally. The safe limit of this ratio is 77%, and the World Bank stated that if the ratio exceeded 77% for an extended period of time, may result in an adverse economic growth. So is debt entirely bad? Not really. Debt can help countries during emergencies and is a way to avoid burdening the present generation in the name of tax. Borrowing becomes an asset when invested in revenue generating ventures like industries and infrastructure. Let's understand this from our example of Raju, the business owner, who took a loan from a bank to expand his business. However, things took an unexpected turn. Instead of generating more revenue to repay the loan, Raju found himself trapped in a loop of borrowing as he wants to meet some emergency spending. Each month, he took another loan just to cover the previous loan and the expenditures. It is important to note that debt, if not utilized efficiently, will be a burden to whole economy. The borrowing must be invested in something which will give you sustainable revenue for a very long time. If US continues this pattern of spending, it will inevitably lead to default and bring in debt crisis, wherein the task of repaying public becomes extremely difficult. Looking back in history, many places around the world have faced similar situations before. But now it is happening in United States, a country known for being really strong with a steady currency. If US struggles, it will affect everyone globally. and result is a lasting slowdown in worldwide economic growth. If you see the current trend globally, the world is constantly changing from COVID times, where governments worldwide spent unprecedented amount of money on healthcare, vaccines, and economic relief. The US government was no exception, which pumped trillions into its economy to combat the effects of pandemic. Additionally, IMF has raised concern that there are 70 countries that could face economic crisis like Sri Lanka.
The IMF is seeing 70 countries as potentially the next Sri Lankas out there, and we really have to act and act urgently.
This is just intensifying the global unsustainable nature of economy. Also, IMF stated that the global economic growth will slow in 2024. Coming back to US, even after 3 years of COVID, the US government continues to spend in the name of military efforts due to the geopolitical tensions, particularly in Ukraine and Israel. With the added inflation and interest rate hikes, the debt reached near to $34 trillion, which is equal to 9 times the GDP of India. Due to this enormous debt, the Moody's, a credit rating agency, reduced the American bond rating. This decrease in rating indicates the risk of defaulting. Consider the ripple effect of this situation. Just like Raju's business, when a government consistently borrows without the means to pay back, it sets the stage for financial disaster. And if a government can't repay, it fails. It's not just about them failing, it's about the people who invested in government losing the money. This loss of confidence will trigger a drastic reduction in overall demand. People stop spending, businesses struggle, and suddenly you have got a recession, which is worse than usual economic downturn. The US economy already faced a technical recession in 2022, which means the growth rate running in negative for a consecutive 2 quarters. But this ticking bomb of debt could slide us into actual recession, where heavy job cuts, rise in unemployment, fall in global trade, and negative economic growth will be witnessed for a very long time. Speaking of recessions, it is essential to recognize that economies often seek a reset to ground things back to basics, and we are witnessing a perfect storm. If you see the 2008 financial crisis, it's not just US that affected. The crisis can spread like an epidemic and hurt economies worldwide. Just like 2008, the default of today will be widespread and severe, causing markets crash worldwide, and this might bring in global economic recession.
Near meltdown of the global economy.
Let's explore the concerns India should have about the US debt crisis or recession. The impact will depend on magnitude of the recession. However, given that the US is the India's largest trading partner and significant source of foreign investment, India should be prepared for decreased foreign direct investments and reduced exports. The Indian IT industry will also be affected as majority of multinational corporations depend on projects from US. Rupee may depreciate due to uncertain dollar value. The obvious recessionary patterns such as job losses, low wages, increased unemployment, and higher debt levels will be felt in India. Businesses will face tough times as big companies may stop expanding and start cost cuttings. Additionally, many startups might end up going bankrupt. The fear of recession itself will likely cause the stock market to fall in India either immediately or after the 18th Lok Sabha elections. De-dollarization is expected to occur, that is, looking for alternative currencies for international payments as the US dollar's stability becomes uncertain. This trend of de-dollarization is also observed globally. As a result, a new dominant currency or a new global currency, possibly a combination of two or three strong currencies, may emerge. If we see into the future, there will be a good news if US successfully controls the inflation and pays off its debt. which is also confirmed by its leaders.
And defaulting on our national debt is not an option. Default is not an option. Repeat.
But if the trend of spending continues, the recession will be certain. Finally, what should we be doing? Keep it simple. Stop unnecessary spending and fill in the emergency funds.